right, joining me is Pascal St-Jean, President and CEO of 3iQ, who is one of the world's leading alternative digital asset managers. That includes offering ETPs covering Bitcoin, Ethereum, Solana, and now XRP that just launched last week. And I would say 3iQ has definitely been ahead of the curve. So they were actually the first company to launch a Bitcoin and Ethereum ETP listed on a major global stock exchange. They also had the Middle East's first exchange listed Bitcoin based fund, along with the world's first Ether staking ETF. So again, they've certainly been a pioneer in bringing digital assets to investors in regulated vehicles. And so Pascal, so great to connect. I'm not sure how we haven't crossed paths before.
Well, thanks for having me on. I agree. It's been too long in the making. So happy to be here today, though. And again, our job is always about bringing what's happening in the space globally. How can we help educate? And we're here to help. Like you said, we've been a pioneer, and the team's super passionate about the space. So glad to be here.
Well, I love that. Our goals are certainly aligned around crypto education. So let's start with this 3iQ XRP ETF, ticker XRPQ. As I just mentioned, that began trading on the Toronto Stock Exchange last week. This is one of the first ETFs in North America providing investors exposure to XRP. I guess first, how's everything gone so far, just in terms of trading and investor reception?
So it's been good. So basically, definitely between last month or month and a half ago, we had launched Solana as well. That had been, I think, 3+ years in the making for a new ETF in crypto in Canada. And so you had Bitcoin, Ethereum, and so I will say that the Solana launch was a little more stressful, like retesting the pipes and plumbing and get everything reactivated and making sure that the markets are aware that is new innovation. So fast forward a month after that, we did just launch XRPQ. That's gone a lot more smoother in terms of the launch. The team been 2 launches in less than 2 months. In terms of the reception from the retail perspective, probably one of the most asked for products out there for a while. So the database for XRP was quite large, and so we were quite pleased to finally being able to bring it back into the market, and super pleased that because of our ethos and why we're in this space. We're not just an ETF issuer. We are a digital asset manager, pushing the boundaries of what's possible above and beyond just ETFs. We're here to support the ecosystem. And so we get a lot of validation and a lot of support from the community, which is why Ripple also backed 3iQ by being one of the lead investors into the product, because they knew that who we are, what we've done in the past, and that we invest a lot of time and resources to growing the space. So it's been great to see support from the foundation, from the community, and again, investor demand has been quite positive.
By the way, as part of all of this, I saw that you rang the closing bell at the Toronto Stock Exchange last week. How was that? I'm assuming you've done that numerous times before.
Yeah, so I mean, again, it had been a while. So we did 2 in the last 2 months against Solana and XRP. A lot of fun. I mean, we have a global team. Even the team in Canada that operates the ETF are spread across multiple cities. So we always take this opportunity to bring people together. So ringing of the bell, we fly people around, go ring the bell, have fun, connect, celebrate, and then after that, go have a little bit of a celebratory drinks and dinner as a team. So it's always a great opportunity to celebrate and bring people together. So it was a lot of fun.
On the note of the Toronto Stock Exchange, and for this particular podcast, I obviously have a lot of U.S.-based listeners. I was hoping you can explain who can actually buy your XRP ETF right now.
So that's a great question that we get asked all the time. So there's a difference between who can access and how can we market to, right? So from a regulatory perspective, we can market to anyone in Canada, including retail. And globally, we can market to accredited investors, but not retail. That's the marketing side. Access side, this is a globally listed product on the TSX. And so if your brokerage firm has access to Canadian stocks, so if you have access to the TSX through your brokerage account, you do have access to our ETFs. And so our US-based currency ticker, XRPQ.U, all our ETFs have a .U in Canada, which is the US dollar equivalent. So you don't have to worry about foreign exchange conversion. That ticker, again, if your brokerage account, like an Interactive Brokers, which gives you access to a lot of global markets, gives you access to the TSX, you will have access to this ETF. So all is all brokerage and platform dependent.
So in terms of XRP itself, my impression, I think a lot of investors are pretty familiar with Bitcoin. I would say certainly Ether,
Yeah.
but XRP maybe not quite as well known. I mean, it is what the fourth largest digital asset by market cap, so certainly known. I just don't know that it has the same level of following as, say, something like Bitcoin. So how do you like to describe what XRP is, and just what do you view as the high level investment case here?
Yeah, so the biggest thing when we do a lot of institutional education and we try to separate Bitcoin and the other chains that are within ETPs or ETFs, we won't go into projects that are being built on top of this. But if we look at Bitcoin, when we educate and people are starting to get the case of that as a macro hedge, it's a digital gold for a digital world, so that makes sense. And then we move into the sort of call it tokenization, digitization, cross-border payments, that whole narrative is starting to take shape globally. We're seeing it with the case of stablecoins, the Circle IPO, et cetera. So the concept of tokenization, cross-border payments, the legacy system like Swift and et cetera, being expensive, slow, and not built for the future. Institutions that we educate and investors that we educate are starting to get the case for Ethereum, Solana, and XRP. And so when we educate or advise individuals on that case, if they're looking for a broad-based exposure to the future of the blockchain and the finance, then they tend to diversify. Now, if they're looking to pick winners or if they're looking to pick use cases, we get a little bit more into the details, and we're starting to see an emergence of clear use cases for each, right? So Ethereum is kind of becoming that enterprise blockchain. You're seeing a lot of layer twos, right? The scale up solutions, Base being one of them, Arbitrum and others, they're all based on that. So scaling solutions, and you're seeing large institutions building, those layer twos on top of Ethereum so that they could control the ecosystem and build their own sort of DeFi ecosystem. We're seeing that with Deutsche Bank and others. And so Ethereum, we're calling it the B2B or enterprise sort of blockchain. Solana is clearly winning on the retail side, right? You're seeing a lot of the, gaming opportunities, the meme coins, but put that aside, the X stocks that just came live with Kraken and others, where now you have permissionless tokenized stocks, potentially distributable on DeFi. So a lot of retail innovation happening on Solana. And then XRP is really trying to displace some of the legacy cross-border payment systems, liquidity provisioning, et cetera. So kind of trying to displace the Swift system. With that being said, they're also doing a lot of innovation and trying to create their automated market makers and their DeFi pools and their own tokenization models as well within Ripple Labs. And so they're trying to compete on that level, but clearly they're trying to win at the let's control the development, control the ecosystem so that it's institutional grade and go win those institutional mandates. And so again, all three have have aggregated not only a lot of investor interest globally, that's where they're the largest, but also really starting to build a lot of momentum at the client side perspective. So again, it all depends on if you're looking to bet on a winner, are you looking on at XRP being able to displace Swift? I mean, the fact that they've won a lot of the cases recently and have built some partnerships globally is looking very promising for XRP. Solana, if you're looking for more of a retail blockchain play, clearly has gained a ton of momentum, and the foundation is doing a lot of work to try to become that sort of on-chain NASDAQ, which is part of their mission. And Ethereum, again, even though the price hasn't moved much this cycle, from a gathering, though, that enterprise demand is doing a great job as well. So those are the three clear winners right now that we're seeing, which is also why we're seeing regulatory clarity around those three assets being allowed into ETF structures right now.
All right, so a lot that you laid out there that I want to try to unpack. First of all, you've mentioned Solana a couple of times, and
Yeah.
you mentioned how you rolled out the 3iQ Solana staking ETF.
Yeah.
That was back in April, ticker SOLQ. That's also on the Toronto Stock Exchange. How's that going so far, just in terms of investor reception?
Yeah, so that one, within the first 2 months, so let's put it this way: within the first 2 days, it became the second fastest growing ETF in Canada of all time. So within a day and a half, we got to 100 million in AUM. But again, Canada compared to the US, we are we are 1/10 of size, right? So reaching a billion is a big feat. So reaching 100 million is a big feat in a few days in Canada. With that being said, we've seen a lot of U.S. demand from institutions, and we've made that very public in our press releases. So Skybridge Capital and ARK Invest and have allocated to our ETFs as an allocation to their ETFs and to their fund of funds, and so they saw the value in what we've built, particularly on the staking side. So that one is growing quite nicely. Great trading volume on a daily basis, and so we're seeing very similar out of the gates positioning for XRPQ. I will say right now, less institutional demand, much more retail. We're getting a ton of inbound requests. Sorry, for XRP holders who are saying, can you take in-kind subscription? Because I'd love to hold that in a tax-advantaged account. Unfortunately, right now, that's not the case in Canada and the U.S. I think both industries are lobbying and pushing for Canadian and U.S. regulators to accept in-kind. When people may wonder, why would you want to, take your XRP and put it into an ETF? It's for those tax-advantaged account structures that you can, that right now it's very difficult and impossible in Canada, quite frankly, to hold spot crypto in a what would be the equivalent of a Roth IRA or a 401k, whereas with the ETFs you can, and so you can let your crypto grow tax free, which has a huge advantage. So again, hopefully that's the next level of innovation. Knock on wood that we can get through and allow existing spot holders to participate in the benefits of the ETF.
Well, and plus you get the institutional grade security of those
Correct.
crypto assets as well. The other crypto-related ETFs you currently offer, which we've alluded to, the 3iQ Bitcoin ETF, ticker BTCQ, and then the 3iQ Ether Staking ETF, ticker ETHQ. And you can feel free to comment on both of those if you'd like, but I'm curious how you decide which digital assets to offer in an ETF wrapper. Like, what is worthwhile in your opinion, right? Because obviously there are a lot of digital assets out there. So how do you think about that?
So until recently, that's why it took so long. It took basically over 3 years after the original launch to get anything else out. Because the original two, the backstory of 3iQ is, we remember FTX not too long ago, but there's been Mt. Gox, right? There's also a Canadian exchange called Quadriga over 10 years ago. There was a Netflix documentary on it. So at some point, we felt that it was time to bring regulated crypto to Canadians. And that's the journey we took on in 2017, very, very early on. So to build the ecosystem, bring the counterparties together, work with the regulators. We ended up having to take them to court, like Grayscale did in the US, but we did that way back when, and won the case to bring regulated products. At that point, Bitcoin and Ethereum were the only two large enough and that the regulators were comfortable with for no other reason than just size, right? And so after that, we've been working with the regulators to try to build a framework, okay, in terms of how do we grow the space versus having novel filings and picking one and picking another winner, and how do we create a framework that we can launch. And so that took several years, and now we finally got to a framework. So there's the regulatory framework in Canada that may change over time, and then there's the 3iQ framework, which we right now we superimpose on top of that. So the first one is we finally come to a conclusion that if there's a regulated futures market, the regulators will allow it to go into an ETF format. Multiple reasons. One is if it's big enough, then there'll be demand for regulated futures. That's the regulators' way of saying, you know what, I need to understand, why there's demand. There's just demand, and that's a checkbox for them. The other one is until market makers have the ability in Canada, anyways, to hedge in spot crypto, they need mechanisms to basically hedge their positions as they market make these products. And so having a regulated derivatives on the CME market was also important for price manipulation, for price discovery, and to make sure that the ETFs trade as closely to spot as possible. That's something we're very proud of in terms of how we settle, but also the general market dynamics in Canada, so that the investor is not getting blown out with a massive spread, right? So those things, again, the regulators' job is to protect what's the best interest for the investors, not to tell them what to invest in, but to protect. So now we have hedging mechanisms and ways to test that. So that was their number one concern. Now, with that being said, we're seeing market makers starting to get their infrastructure ready, some of the banks and others, to be able to market make and hedge in spot. So that means custody, et cetera, and plugging into global liquidity providers that give them spot access. And so we foresee in the coming years, maybe even sooner, the ability to not have to rely on the futures market to hedge the position. If that happens, then we could go back to the regulator and saying, hey, infrastructure is ready, the market makers are ready to be able to protect investors, from a hedging mechanism. So we believe that will unlock a broader based, opportunity beyond the top four right now, which have CME futures. So then we fall into what's next, and this is where, from a 3iQ perspective, do we see demand for an ongoing series of single asset ETFs? Hard to tell. We've seen great success with Solana, great success with XRP. I will say our CRM and investor demand in general is thin for anything beyond that at the retail level to justify a single ETF, which is why we're very bullish on the future of indices and baskets. That's where our focus is moving forward. Again, giving diversified, broad-based exposure, and ideally bring that into the future into an ETF format for investors longer term.
I love how you describe that there. And a couple things that I would note or ask you. So I thought earlier you did a fantastic job of just describing the higher level use cases for XRP and Solana and ETH. And I like how you just described that as market makers can hedge in spot, that'll open up the number of crypto asset ETFs potentially coming to market. And so let's talk about multi-crypto asset ETFs. I know you also offer a fund that holds a basket of crypto assets, but that's not in an ETF wrapper, correct?
Yeah. So the goal was, to start building the pipes and plumbing, right? And for those. So we do offer the CD20 index in a private product. And because of a private product nature, it's only available for credit investors. So that's the give and take of, you could launch more products, more active strategies, more basket strategies and private products. But right now in North America, those are not retail accessible. But again, we build the pipes and plumbing, build the use case, build the partnerships, keep pushing the edge of what's possible with our partners, with the sort of the community, as well with the regulators and counterparties to make this happen. So we are hopeful, not more than hopeful. We're bullish that in the coming, hopefully less than years, you will see a slew of index ETFs, and all of a sudden now you have, once the index world opens up, you have diversification of underlying assets. You have staking, which we got approved, right? You'll have a derivatives market that's thriving, whether it's the options market or the futures market. So now you have all the tools in the toolbox to start creating some structured products and interesting active strategies accessible in ETF vehicles, which we believe will be the next chain of evolution in crypto ETFs beyond single strategy ETFs. And so I think there's still a lot of room for innovation in the coming years in the ETF market.
And that's sort of where I was heading, because with the way you described, again, XRP and Sol and ETH, my impression, you tell us, but my impression is that you don't view these various chains as necessarily a winner take all. You may have some scenarios, different use cases. And so if you're an investor, you see value in investors spreading their bets around.
100%. And not only that, I mean, as you go beyond layer one settlement chains, right? Like there are other projects that are basically building on top of these chains that are also digital native, right? So yes, you have, like, for example, chains like SUI and SEI that are starting to gain momentum that may at some point have enough demand for an ETF, but those are all right now, those are, call it layer one settlements, right? So put Bitcoin aside, you have, your Solana, ETH, XRP, they're all trying to be some form of infrastructure play for the future of finance. But the next layer after that are applications being built on top of those chains. And that's where the broader base sort of concept will come in handy. And if you use different, governing structures to these indices, whether it is market cap or whether it is use cases, we're starting to see some players globally create niche type of indices, like, for example, metaverse or layer ones or AMMs, basically all different types of indices around applications, layer ones, and use cases. And so, again, it will take a while, but right now we're seeing the trend to be up and to the right in terms of innovation and acceptance of these types of products. And so I think the next 5 years will be explosive in the amount of products that will be out there for investors.
I agree. I'm highly bullish on crypto index ETFs overall, and I would say actively managed
Yeah.
crypto ETFs as well. And I just go to first principles, and this is a little bit cliche, but we're still so early in
Yes.
where all of this is heading. And if that's the case, diversification makes a ton of sense.
Hmm.
And I think, you know, especially in the financial advisor category, advisors love diversification. And so to be
Yes.
able to allocate to a basket of crypto assets and let the winners emerge over time, it's really no different than how a lot of investors approach their equity exposure.
It's the only way. So if we just look at what's happening, so we talked to a lot of our thesis that our strategy was built against, besides our mission of growing the space, was okay, as banks and others onboard custody, because now you have this growing crypto wealth, right? Some of the fastest growing RIAs in the US are crypto exclusive RIAs, right? So that's growing a mile a minute to service that community. If you do not, bank or custody those assets, you cannot bank that client base, right? So now that emerging client base that are looking for banking services in the traditional space, right? You start with custody, you offer trading services, you offer, then all of a sudden you move into asset management services, right? And so there's a clear progression moving on. And then once you fall into asset management, you fall into the wealth channels. And so for the wealth channels, for the space, again, when you're talking why we're very bullish and why I agree with you, we're still very early, is that the the banks are just starting to explore custody, right? We know some are coming in. So the path I just described to you is happening. It's happening at different speeds globally. That is happening. And so that will unlock, access. It will unlock asset management. It will unlock the wealth channels. Right now, the wealth channels, when we talk to RIAs or advisors in Canada, they tend to default to Bitcoin. If they're going to pick one asset, let's go with the biggest. I could say it's digital gold. It's easy to explain to my clients, and we just leave it there, right? To start picking single asset winners, it's very difficult. Like most brokers today and advisors don't say, let's go all in this stock unless they have high conviction as the winner. They're going to go into the index approach or the basket approach, even for stocks. If you're bullish EVs, Tesla has been a good bet, but maybe you want to diversify into a EV basket or the AI basket, or instead of just picking Nvidia. Although if you can pick the single winners, you've done great. But from a diversification and risk management perspective, you want the basket. So this makes sense. So the basket approach, whether actively managed or index based, will unlock more of the wealth channels and will eventually get to discretionary portfolios, which is the holy grail to grow this space. Is instead of being client demand, right now the client says, I want Solana, sure, let's go pick the ETF, right? But over time, it's going to be, I want crypto. The wealth channels are going to say, let's buy a basket. And over time, these will become discretionary and will be injected into model portfolios. And then you'll see the space continue to evolve. This is where things are heading in the next 5 years.
Obviously, a big linchpin in all of that happening, and you were talking about this, is on the regulatory side of the
Yep.
equation. And I guess two questions I want to ask you here. First, something that I have observed in covering ETFs for the past 18 years or so is that Canada always seems a step ahead in innovation. It seems like Canada will launch an ETF and then we'll see it in the US, I don't know, 6 months, a year, 2 years later. And that's certainly been the case for crypto. Why is that? Like, why have Canadian regulators been more open to
So
innovation?
it's interesting because it, we have so the regulatory body in Canada right now is provincially based. So imagine having a regulator per state, and you have to start, and then there is a passporting function. The challenge, though, is if you start in Ontario, which is Canada's largest province, where we're based okay, you're dealing with the OSC, the Ontario Securities Commission. If they say yes, then usually the passporting happens. If you go into the smaller provinces and they say yes, the passporting may not happen. So not everyone's treated the same. So you want to be regulated by one of the big ones, which is the AMF or the OSC, tend to have those passporting functions. And so to test things, because you are Canada is the financial ecosystem is powerful, but it's tightly knit. And so what does that mean? That means that as an asset manager, you could have direct conversations with the regulators, right? You don't have to take them to court like we did. Crypto was a different thing. You can have, conversation, and you could file for novel exemptions. And the regulators, I will give them credit, although slow sometimes, will enable some of these novel filings to take place and then test and see. Right, the same thing for us when we did staking. We didn't require a legal ballot. So okay, test and see, report back to us. How are you managing liquidity? How is it going, etc. So it'll enable that, and then you could scale it, and then it becomes part of sort of the regulatory framework, and then you could scale. Same thing, for example, with leverage in ETFs, not in crypto, but you're seeing, whether it's on the covered call side or even on straight up index exposure. Canada enabled leverage before the US, and so you started seeing sort of these innovative plays on the leverage side to give a little bit more pop. Kind of call it 15 to 20% leverage. We could debate if that increases risk or not, but you saw those things happen in Canada as well. Where the challenge is afterwards is, yes, we enable those things at the beginning, but then it's very difficult to just, spearhead pure innovation. So they're seen as innovative, but then they tend to put the brakes on when it's ready to go, to go hockey stick, right? And that's where the US comes in, learns, a lot, and then says, okay, we're going to go and we're going to hockey stick this. And I think that's what's happening right now with crypto is that, yes, we activated staking thanks to the work that, 3iQ did. The OSC knows that when they say yes to 3iQ, the next day we come with another request. We got a framework, we got a roadmap, and we've been open to collaborating with them on several things. So we're trying to create our moats for in Canada. But we're happy for the space that things are moving into the right direction in the US. I think we're about to see this hockey stick adoption on the ETF side, and that will be more competition for us. We were well aware of that, which is why we diversified globally, and it's why we also diversified outside of just ETFs. It's something that was always part of our roadmap. So we think this is healthy for the ecosystem overall, and we're super thrilled with what's happening down south.
So it sounds like you are pretty optimistic in terms of how the regulatory environment has evolved here in the U.S. From my perspective, I think we're going to get a wave of spot crypto ETFs here in the U.S. before the end of the year. I think, as you know, there are filings for spot XRP, Solana ETF, or staking and Ether ETFs, stuff that is already trading in Canada. But it sounds like you're optimistic on how the U.S. regulatory environment is going to evolve.
Yeah, it will. Look, the question is it even when it wasn't pro crypto? I mean, you just have to sit down and paint a picture over the next 5 years, right? If this is going to be an industry that scales, what does that look like? And I remember when we got approval, I said, okay, guys, like we got to get back to work. Like let's celebrate. We got the first Bitcoin regulated product out there, trading on the TSX, 5 years ago. Do we have a 5-month lead or a 5-year lead? We don't know, but let's not think it's not going to happen everywhere else. And now we have ETFs in Hong Kong and Europe, coming into the US. Japan's about to open up, so now it's everywhere. And so the same thing here. Do we want to gamble on a date on when staking will be approved? Like, first of all, when a Solana or something else will be approved, and when staking in those? I can't give you a date, but can I tell you that it's a yes? I mean, I would not bet against those things happening, within in the future, whether it's 6 months or a year from now. But it's going to happen.
Before I let you go, we've talked about the potential value of taking a diversified approach to crypto. But if we take a step back from even that, I think, as you know, there are still a lot of traditional investors who are very crypto skeptic. There's a lot of skepticism there. And so I'm curious how you think investors should view the role of crypto in a diversified portfolio overall. Why is this a space that they should consider?
So we're starting to, the good news is I've been on the conference tour and a speaking tour, of course, of late. And, so we see the trends compared 4 years ago versus 3 years ago versus last year and this year. The biggest difference this year is I'm getting less and less people in a room trying to say, I gotcha, right? I'm going to say this one comment that is irrelevant, but that used to be the talking point 6 years ago to try to just kill momentum in the room. Those are not happening anymore. Now it's more around people want to get educated. Either they've allocated, they want to know what's next, or they want to get educated, and they're actually asking the right questions, which means that they're starting to get it, right? And so what does that mean? What we're seeing now, and one thing I try to do on stage as much as possible is to say, do you call ETFs an asset class, or is ETF a wrapper, right? And the reality is, it's a wrapper that gives you access to different types of investment via, whether it's an ETF that's focused on REITs, or it's an ETF that's focused on stocks, or whatever it may be. It's a wrapper that gives you exposure. And so this whole world of all crypto is the same, cryptocurrencies, why this one versus that one, it's the same thing as if you were to tell me what's the difference between Bank of America and Microsoft, right? Two completely different use cases. So people are starting to finally understand that each of these have a different use case, and that crypto is just a digital, means of accessing something. Now, yes, Bitcoin is a, tokenized, monetary policy, that's scarce, and that is just, again, digital gold. It's an asset value. It's an asset that's only growing in demand, and in its pristine collateral. That's the use case. But when it comes to the portfolio, the way we talk about it is we try to separate those things now. We don't say just buy 1% crypto. Let's analyze your portfolio. What does that mean? Well, Bitcoin, do you believe in a macro hedge? Do you have gold? What else do you use for a macro hedge? Why aren't you looking at Bitcoin as that? Because it's proving itself to be that. So one is macro hedge. If you don't have a macro hedge, you don't want a macro hedge, fine, ignore Bitcoin. Then we move into tokenization. Do you believe in this wave of tokenization? Like back in the day, people used to say, I believe in blockchain, not crypto. Well, those are really hard to disassociate, particularly when the private blockchains have been known to fail. The reality is, if you want to lead a centralized private blockchain, good luck getting liquidity and momentum. So the whole concept of blockchain is decentralized is what brings the value to liquidity on the blockchain. And for it to be decentralized, you need a token to be able to fuel, the engagement and the exchange of value on that chain. And so when you start just moving on the stable coins, tokenization, do you believe in those trends? And everyone's like, yes, absolutely. I see a lot of value. Well, then you have two ways to play it. You could either play the public markets, like saying, hey, I believe in Circle. I'm going to play the equity. I could underwrite the team. I could underwrite their cash flow. I'm going to go buy, Coinbase. So you play the public market vehicles because you know how to underwrite the risk. Or if you believe in the technology and you want to de-risk the people operational side, if you want to de-risk the company side of things, it's the first time in history where you could own the technology outright. So just buy the underlying. So if you believe in blockchain, if you believe in tokenization, if you believe in stable coins and all that is emerging on that, then you can literally own the underlying infrastructure. So buy a diversified basket of the layer ones. Buy ETH, Solana, XRP, through ETF formats. Voila. So one is a tech play. The other one is a macro hedge. And then we consider everything else right now to be a bit more liquid venture, right? So all of these applications being built on top of blockchain, I used to joke around when my first startup 25 years ago, if it was priced mark to market every day, would have been volatile as hell, right? You're five guys in a garage, right? If that was priced on a daily basis, it would be volatile. So all these emerging projects building on top of these chains are volatile for a reason. They're small cap for a reason. And so treat them like liquid venture, understand what they're trying to build, take a shot at it if you want, but don't position the emerging crypto project against Bitcoin. Don't assess a meme coin against Ethereum, Solana, and XRP. Different use cases. And when I give the example of even in Canada, right, every country has junior exchanges. And so we have the TSX and we also have the TSX Venture. There's a lot of crap, pardon my language, on the TSX Venture, right? There are mining companies that claim to have found the next, $1 billion, gold reserve that never materialized, and it's a penny stock, and it's going gangbusters on the internet forums saying I'm going to trade this thing because it's going to go from 1 penny to 5 pennies and I'll 5x. That happens in traditional markets outside of crypto. So again, the same thing. Don't compare. No one compares that that junior gold miner on the TSX Venture with Bar Gold in the TSX, which has a multi-billion-dollar market cap. So finally, I think people are starting to get it. And I'm sorry that's a very long-winded answer, but the people's understanding of things and how it fits in a portfolio is becoming more mature. And so I'm just not a fan of saying buy 1% of crypto and forget about it. It's not a sophisticated enough answer, and investors deserve to be better educated on how to think about these things.
Certainly the understanding it is maturing, but as we both have said here today, we both believe we're still very early
Yes.
in where this is. Put some context around this. I mean, you're visiting with investors and
Yeah.
advisors really around the world. So
Yeah.
how early are we?
So, so I mean, look, to me, so my career comes from disruptive technology. So, been very active in Web 1 and Web 2. And to me, right, I'll give you two analogies. The first is, for those of you who are old enough to remember, right, the dot-com boom, right? Similar stories, different market structures, but same questions, right? You had the hype cycle, you had the crowd, you had the venture capital coming in, investing in whatever was .com, and people laughed at it. But those who had a vision kept building, and so you had the crash. But all of that money stayed in the ecosystem, and the true technology emerged, and then you ended up with the true potential of what was promised by the technology. So I remember, I mean, in 1999, you were dialing in with a modem. Don't tell me that you're going to have video conferencing and voice over IP and sophisticated online tools when you're running on a 56 baud modem, right? 56K baud modem. It wasn't going to work. Today, we use those things all the time. We shop online. We're talking halfway around the world with each other. So the reality, so the vision became reality. So what happened after 2003, after the crash? No one, the hype disappeared. No one was talking about tech, and then you had Google and Facebook and Amazon and everything else built on top of that. Today, the Mag 7, which keeps the S&P 500 afloat, came from the .com days. So I believe we're circa 2003 for crypto. We had the FTX moment and the last cycle, which was, yes, crypto's been volatile, but the last cycle was a deleveraging. And again, the technology was battle tested. DeFi did what it had to do. The technology worked. Humans were involved. So naturally, when humans get involved, bad things happen. So the fraud that happened with FTX and others happened, just like the .com space where there were companies going public that had zero product, zero revenue. It was all hype. Today, where we are, we're seeing real projects, real foundations, real momentum. So that's where I think we are on the technology cycle. Now, in terms of price and projections, I won't give you a price projection, but I will tell you, I believe we're circa 2003. Bitcoin's at 100 plus, right? Whatever it is today, 105, 106. I haven't checked the price recently, right? We have emerging chains that are getting momentum, and the banks are just starting to get activated. The wealth channels are still just focused on Bitcoin. Discretionary portfolios haven't even unlocked yet. ETFs in the US, besides Bitcoin and ETH, haven't even been approved yet. Okay, sovereign funds, a few have allocated. So we're at the beginning of institutional allocation. The wealth channels haven't really been significantly unlocked. The concept of baskets has yet to be formed in an ETF structure. And so, to me, the risk return, profile of circa 2003, for those who thought that they missed out on Google when it IPO'd, you know, you had a pretty good run in Google if you bought the IPO and ran it for the past 25 years. And so we foresee a lot of upside in this space, and that's where we are. And so when I say we're still early, we're early. We're at a de-risked position in time where yes, you're not going to get the 10,000x, but the risk of going to zero, in my opinion, has been eliminated. The risk of governments not adopting it has been eliminated. The risk of not having easy, simple, regulated exposure has been eliminated. And so, you're entering a time where there's a lot of still upside with a lot of risk being eliminated.
I love the way that you framed all that. The only thing that I would add is that I just continue to be blown away by the sheer level of talent involved in crypto. I
100%.
don't think people appreciate just the caliber of individual who's getting involved in some of these projects. And to what you were saying on being, circa 2003, there's so much what I would call quiet building going on
Yep.
behind the scenes. So we had a lot of noise, and you mentioned FTX, all that. That was, a lot of carnival barking, those sort of things. There are some highly talented people, amazing
Barely any
companies that are
news,
doing
right?
building. Yeah.
Hype's gone, barely any news. Yet, I agree with you. When you look at what's happening, there's a ton of building and a ton of building with integration into some big names.
Yeah, it's going to be so much fun to watch moving forward. Well, Pascal, I love your enthusiasm around crypto, congratulations on the new XRP ETF. Certainly wish you continued success on that, and certainly success with the entire 3iQ lineup. Thank you for joining me.
Anytime. Thank you so much for having us on the show.
That was Pascal St-Jean, President and CEO of 3iQ. Thank you for listening to or watching Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, President of OTR Media LLC. Nate is also President of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.